Let's start with the Indian rupee, which has slipped in trade today, touching an intraday low at 60.27 to a dollar, the lowest since 28th March. The currency declined as stocks gave up gains on profit-taking, and the rupee has shut shop at 60.17. On your screens, nearly 0.5% of a decline. Remember, most Asian currencies also have been trading on the weaker note today. Let's get on board then. Vijay Bambani, who's author and CEO at BSPL India. Also joining us is Ashutosh Khajuria, who's President, Treasury Federal Bank, and he joins us live as well. Ashutosh, hi, let's start with you first. And what's your sense on the currency? Because we saw an 8-month high yesterday at 59.60, and today it's been quite a sharp decline.
Yeah, actually these are the good levels at which, importers are trying to cover their positions. There has been a demand today, I think, mostly from OMCs, oil marketing companies. They are looking at covering their oil imports. But at the same time, I would feel, because there have been lots of NAT bank bids, in the market when it dipped below 60. So it's quite likely that they may be acting on behalf of Reserve Bank of India to see that dollar doesn't weaken much below 60. So I think what I have a feel that I think these are the levels at which RBI would like dollar rupee to stay at and not appreciate a lot, because lots of capital flows have come, and in any case this is very hot money, and therefore the reserve chest needs to be built up. Lots of bids coming from NAT banks also suggest that it may not entirely be the importers bids or so. It could be partly to mop up extra supply of dollars in the market. But in the evening towards close, we found lots of a lot of selling happening, because it did go to 60.28 or so, and from there it has again strengthened. Rupee has strengthened to 60.1415 levels. It could be partly wherein exporters would be finding these levels also to be good to book their forward contracts.
Fair point. Vijay, getting you in the conversation, what's your sense? Because while we are looking at the rupee appreciating and there were better levels coming in from the markets, it really has done a U-turn today.
Manisha, this is more to do with short-term corrections basically triggered by the equity markets also, which have been weak. And yesterday I talked about how the next 2 or 3 trading sessions are likely to be fairly interesting, because the US dollar is likely to see some recalibration vis-a-vis the euro. What you are likely to see is the scope of appreciation of the dollar being somewhat limited to the 60.80 levels that I mentioned yesterday. And at that point in time, I do expect a little bit of a profit taking. Let's also not forget that in terms of volumes, the volumes have been fairly insipid. It's the rally in the currency pairs vis-a-vis the INR has been on very poor volumes, barring the British pound, which has shown a little bit of a perk up in volume. So lower volumes with a price rise does indicate more of a short covering rather than a fresh buying emanating at lower levels. I think the dollar rally might just run out of steam in the next 1 or 2 trading sessions, barring any fresh data points emanating.
Ashutosh, how would you look at the currency going forward? Because while in the previous quarter we've seen more than 3% of gains coming in, this quarter has much more in store. How do you see the rupee flowing ahead for the rest of the quarter?
I have a slightly different view, because there are 2 announcements that have been made yesterday in the monetary policy review. One is wherein the FIs have been barred from acquiring treasury bills in spot or any sovereign debt below 1 year of maturity. So there could be a possibility where on maturity of the existing investments and T-bills and all, the dollar buying may happen, and the money may move out if they are not interested in investing in dated securities, longer term or medium term dated securities. Another announcement was for FIIs to be permitted on the currency futures, on the exchange traded currency futures or so. So if that be the case, there could be a real hedging demand for hedging the dividend payments and various other inflows that come in. So there could be some demand getting created for greenbacks through these 2 measures. In the shorter term, I mean, I'm talking of maybe 1 to 3 months.
Fair point. Ashutosh, how do you look at the RBI statement, since you mentioned that, of course, there is no change in the policy yet? Do you see a couple of next quarter also go status quo?
I think from the tone of what has been stated yesterday, it appears that Governor would like to have the stability on the interest rate front if no new challenges are forthcoming. So there would not be a frequent change in policy signaling rate. So if that be the case for some time for now, I would see rates to stay where they are, and more likely, I think I would see softening once the confirmation of improvement in the inflation indicators are there. I think El Nino, and there are so many things arising out of it, whether El Nino is there or not, if it is there, whether we are prepared for it, is it really going to impact the the food production in India? If it does so, how much is the buffer stock available with us that could counter the inflationary tendencies? All these uncertainties he himself pointed out in the press conference with media persons and all. So I think he would like to watch it closely, and thereafter would like to have the stability in present interest rate structure for some time, and then look at the new move. So I see maybe if there's no steep deterioration in the inflation indicators, there could be some softening happening after maybe say about a couple of months later or so.
Fair point. Let's also get in a view then from Dominic Schneider. He's head of commodities research at UBS Wealth Management Research. And Dominic, what's your sense really on the rupee? Because the previous quarter has been quite positive. Do you see further gains in this one?
Well, for the short run, I think the momentum looks quite strong, so we could head towards the 58.7. I think that's highly likely. That would be quite still a positive view in the very, very short run. On the other side, I think about inflation in India, and I think that message is very clear. It's probably around 8%, and with that kind of high inflation, it's going to be difficult to appreciate in nominal terms, so I would be rather cautious. On the other side, I do expect some deterioration in some of the current account balance deficit, which actually improved quite a fair bit in recent quarters, but I would be worried if the economy does gain a little bit more strength. There's a good chance that this deficit widens again. And the last point is clearly, if India starts to relax some of its gold restrictions, that would clearly also add to the weakness of the currencies down the road. So be cautious, looking at somewhere 65 as a long-term target.
Final question to you then, Ashutosh. What's your sense really on the inflation and the growth numbers? Most of the participants are going with 8% on inflation, 5.5% on growth. Would you agree on that?
Yeah, I would agree with it. In fact, inflation could surprise us on the lower side because there is a lot of base effect built up between June and November. Now, I think if that plays out, we can see much better number than 8%, come January 2015, because that's what the target RBI set for itself, going by the Urujit Patel committee recommendations. I think they should be on the trot, or maybe better than 8% or so. As regards growth, it could be 5.5%, but there is I would have a bias on the lower side. It could be lower than that, because the change or the U-turn is not yet been visual. So I think I would say that 5.5 is possible, but there are risks on the lower side.